All right, guys. Well, thank you for joining us. Welcome back. Today is a special coffee chat. It's actually our last coffee chat of 2023. So it's been a journey, and today we're going to spend just wrapping up some key learnings and just reflecting on what's gone on this year and what we've learned here at PCMI and in this series and collectively. So great to see many of you again. If this is your first time here, unlikely probably at this point. But quick intro. My name is Lindsay Lehr. I run the uh, Payments and Commerce Market Intelligence, or PCMI. And this is the fourth year running, actually, of our Coffee Chat series. And today is the last one of the year. We run these sessions as a way to generate collective learnings and insights across the payments industry, mostly in Latin America. And especially today, I really invite your guys' active participation because we're going to be recapping some of the key learnings from this year, and I'm going to be asking for your active evaluation in the chat in particular. So, and I would love to hear you guys elaborate on some of the trends that we're going to be speaking to. So, please be alert to that. We'd love to have your cameras on if at all possible. So, let's go ahead. And I also want to, just before we get into this, take a moment to introduce my co-panelist today, Cesar Borelli from PCMI. He is actually one of the newest members of our team, Associate Managing Director, really a fantastic addition to the team with vast experience in payments and fintech, and really helping us develop the practice from a business development and a senior voice and analysis and helping to charge forward. So Cesar, welcome. If you want to give just a quick intro to our network here.
Thank you, Lindsay. I'm very glad to be here, especially during the last session of the year. I have joined the Coffee Chat for a number of years as well. So very glad to be here. Thank you for the opportunity.
Awesome. So you'll all be hearing from Cesar today. And we have a hand up. Raymond, did you want to jump in with anything?
No, I just I wanted to introduce myself to the group, Lindsay. I mean, thanks for that.
Oh,
I mean,
please do. Please do.
I am a first-time visitor to the group.
Oh, amazing. Well, welcome.
Yeah, no, thank you so much. I was actually introduced by Nick Brown, actually, who's on the call as well, I see. So, Nick and I, we were just talking about the industry and whatnot. And, he mentioned that this is like a super interesting forum. There's one the following week as well. So here I am. Just a little bit about me. I've been in the payments industry my whole career. I'm working on a startup at the moment, but right before then, I was running product strategy for all things payments and financial services at Meta. And then before then, I was with Visa for a little bit over a decade, running strategy.
Oh, and terrific.
So nice to meet everyone. It's good to see you.
Oh, fantastic. Well, if you come from Meta, you must be best friends with Nick. You guys must have some very interesting conversations.
Okay. I haven't dug into that stuff too deep with Nick quite yet, but we've exchanged a lot of opinions on a lot of things, and I'm looking forward to that as well.
I noticed the fact that he's not there anymore.
True. And Raymond, what's your region? You mentioned Europe, right? For Visa, was Meta a global role? Anything on
yeah, so I was so Meta was a global role based out of headquarters in California. I'm based out of California, and then with Visa, for the last the last role that I had with Visa, I was based out of London, which is their European headquarters.
Perfect. Well, terrific. Well, thank you so much for saying hello. Welcome. Love to have your insight here. And can you tell us anything about the startup you're founding, or is it too early for that?
No. I mean, I can speak to it at a general level. So it's essentially I guess we call it a commercial neobank, right? So it would be starting up a new bank, but squarely in the commercial space, not the retail space. And even within the commercial space, I think we're looking at serving other startups in particular, and we might have a bit of a sector focus as well, right? Depending on the sector, it could be healthcare, could be something else. It's all sort of in the incubation stage at the moment. But yeah, cool. we just thought that there'd be a good opportunity in the face of commercial banking for startups and small businesses not quite being that great to begin with. And then with the whole Silicon Valley Bank incident several months ago, I think it creates an even bigger gap in the market. So yeah, just a little bit about that venture.
Awesome. That's great. Well, Cesar actually just published a piece of work on that topic. So You
Very
guys,
cool.
I encourage you guys to connect. Yeah,
Awesome.
that's great. Well, welcome. Thank you so much for chiming in and introducing yourself. We love that. All right, so let's go ahead. Just to recap the year, before we get into kind of our trends, just want to remind us of the progress we made this year in our coffee chat series. So we have 19 coffee chats this year. We always ended up around 19 or 20. We had fantastic speakers from all over the ecosystem with a huge variety of topics, right? Now we did, this year I think was heavily influenced by Brazil, right? The trajectory of Latin America is being very much influenced by Brazil. And the most innovative and big news this year has consistently come out of Brazil, thanks to PIX, open finance, and just the size and the dynamism of the market. Now, of course, Latin America is highly diverse, and not every country by any extent of the imagination is similar to Brazil necessarily. So we tried to provide that variety. But we do know that, especially globally, the more we talk with clients globally, Brazil is really marking that path. So we did see that as a pattern in our content this year. Let's move ahead. Oh, okay. Yeah. So anyway, I want to thank you guys for your participation and support throughout the year. We had 19 sessions at the end. Once we get through these trends, we'll kind of look at a little bit more detail about the results of our coffee chat. But what we wanted to do today was kind of review 8 learnings. And some of these learnings that we're going to go over are kind of definitive statements that we can make based on what we learned this year. Some are a little bit more speculative or a little bit more opinion-based. But I just kind of wanted to provide a recap of what we at PCMI have really come to understand through 2023 to position us to go into 2024, having done that reflection and having a good understanding of where the industry is today. So, and some of this you may have heard me say already, but the first that I think is potentially one of the most important taking place in Latin America and globally is the role that central banks have taken on this year. Now, it's not necessarily novel in 2023, but I believe that we saw the role of the central bank globally really consolidate following the success of Central Bank of Brazil with PIX and other innovations, and then other places around the world. Central banks are no longer just regulators. They are actually active industry players. They are acting as competitors. They're acting as enablers. And most surprisingly, they're acting as top innovation drivers. And this is happening to different extents around the world, but I think Brazil has really proven that to be true, probably as the top global case. Even when we talk with regulators and central banks all around the world, in Europe and Africa and Asia, they're wanting to understand what's going on in Brazil and why the central bank has been so successful. And this has several implications, right? Central banks are now competitors in the ecosystem, which is great for many reasons, but also potentially harmful or just difficult, introducing a new element of competition for other players. And so it's really changed, broken open the competitive landscape, and poses a completely new set of factors that industry players have to deal with. And we see Colombia actively trying to follow in Brazil's footsteps. We see Mexico going in this direction. We see even central banks in Central America moving in this direction. So in Latin America, the Central Bank of Brazil has had a profound impact on what's going on in the region. And so this is our first key learning. And Cesar, I want to ask you, I have some specific questions, but what are your top line, comments on this topic?
No, I think it is spot on. I think they have a very important role within the innovation, and especially when we talk about real-time payments, CBDC. I think all those topics they have been I think very instrumental. One thing that I would say is that I don't like to see them as players, because I don't think that they should compete with other players, but I like when central banks will take the more like the orchestrator approach, right? More when they will be the consumer advocate, being the consumer, the population, the individuals, or the merchants, the businesses. But I think when they have that role of being the orchestrator and like having the people's interest in mind, I think good things can happen, right? And if they are open to, I think one of the most successful things in Brazil, for example, with Pix, I think they have been very, very focused on collaboration since the very beginning. So bringing together banks and fintechs from day one, and building the product and the solution, like hearing everyone else. So I think for me that was the key thing.
Absolutely. Eric, jump in. I want to hear I see your comment here. Feel free to jump in.
Thanks, Lindsay. My 2 cents on this. It's interesting that central banks have a lot of power, have a lot of insight. They have done a lot of research. I give them credit for doing the analysis on this part. But on the proactivity side, I think there's a strong divergence. So Cesar had mentioned Brazil, PIX innovation. We've seen crypto innovation. A lot of functionality has come through that. That said, when we have Colombia, for example, the Superintendencia has been very open to hearing about other projects. They put a sandbox together and nothing comes of it from that. So I think speed of execution, adoption, innovation is different between the central banks.
Fantastic. I love your statement here. The sandbox is where innovative projects go to die. So there's goodwill here, but potentially missing some elements to really support execution.
Spot on.
And I think for PIX, for example, that was a strong mandate from the central bank, right? So it was not optional for especially for the licensed commercial banks with a certain number of accounts. They were required to join. So I think it was a mix of they had a sandbox. They had opened the doors for fintechs also to participate in the schemes, but there was a lot of they had a strong top-down mandate, especially with regards to banks and the ones that should be required to participate since the very beginning.
So a couple questions for you, Cesar, and also anyone, please jump in on this. This kind of begs the question. The case of Brazil, which we've been studying payments for. I've been in this industry for about almost 12 years now, and we see all this private sector innovation, people doing different things. But truly, the biggest innovation disruption that we've seen in that time span has been the actions of the central bank, which is a bit surprising. So the question is, in this industry, is government intervention really actually required to truly disrupt the industry at scale and to drive innovation at scale? And if that's so, what does that mean for countries around the world who are trying to kind of break open silos and move the needle on things? I mean, do folks have an opinion on this? Is government intervention, or is this role of regulators really required to move the needle in this way? Or is this just kind of an anomaly that worked in Brazil and it could work in other ways in other places?
I personally think it's not I don't think it is required to have a central bank intervention to see innovation. I mean, we have seen innovation so far, but I think the big question here is that central banks should have this agnostic view towards having something that is good for the population, right? And when we talk about private companies, they not necessarily will have the same vision. They will think about return on investment. They will think about returning the capital to shareholders. So I think there's the pressure to monetization and to make this sustainable. It will be much more aggressive than when the central bank tries to orchestrate something.
Can I jump in on this? Because it's
Please do.
There's a really important role for governments and central banks to provide a foundation on which innovation can then act. If there's no foundation, I mean, we've got plenty in the West, but in developing countries, there's not much there. This is where PIX has been so good. It's set up a foundation that is available to so many, and it's fairly easy to use as well. But without that foundation, any kind of innovation, it's such a huge mountain to climb that very few can achieve it. Whereas if you've built that foundation and then you realize as a central bank that your role is to then take a step back and allow it to happen, that's when magic can happen. Mm-hmm. Because then you can get a group of people that say, hey, I've got a really good idea, but we've got a foundation we can build upon, and we can build our specific focus that we want to deliver. And then we can use PIX, for example, to then reach our customers. Now you've taken a lot of the work out. Otherwise, that small group of people will never be able to do anything.
Mm-hmm. Government, right, as the ultimate enabler, right? Kind of what we're talking about.
Exactly, yes. And that when there's not enough, it can be too huge of a leap to achieve anything. And if there's too much, it's too stifling. There's a narrow band in the middle where you can really allow a lot. And I think that's where PIX has done a really good job.
So question to, I don't know, I don't personally know the answer to this, Brazilians on the call or anyone who's studied up on this. Another question is in a government institution, in many ways, central banks are meant to be autonomous, but many times they're not. How subject is the continued innovation agenda of the central bank? How much is that subject to changes in government, changes in the president of the central bank? How long can this last? Is this really, have we set up the foundation for this agenda to really become stable, or is it vulnerable to change in the future? Does anyone really have a perspective on that?
Well, I'll jump in again. At a general level, unfortunately, when you have power, there's the desire for some people to take hold of that and then grab more power. So it's never stable. It's always a case where the population has to look and say, we have to put boundaries on this. Mm-hmm. And if the power is through the government to put the boundaries, then we're going to vote more people, the right people in that are going to rein that in. Because nothing is ever stable when power is involved. Mm-hmm. That's just the nature
I like that.
Human beings.
I like that statement.
But especially,
and by the way, Lindsay, and by the way, Lindsay, if I may, I think it's very difficult to standardize a role there because depends on the country situation. In some countries, the central bank nowadays is more focused on trying to prevent inflation than, some it has other priorities. And, when I'm talking about in case of Argentina, and there is another role. For me, is very important is that the central bank never becomes a showstopper of the innovation. Instead of, you can be incentivize the innovation, or at least you can prevent yourself to become a showstopper and let the players play, as Cesar said before, rather than trying to become a key player themselves. But and that brings me one question to you, Lindsay. You said before that this is happening globally. We have seen something of that in Latin America. Have you seen in some other region how the central banks are playing?
Well, the best example is India, right? UPI, which predates PIX and has had a similar level of success in different ways. It hasn't necessarily penetrated the entire population in the way PIX has, but it has moved, some would say, even faster in adding on value-added features and empowering UPI to be a digital public infrastructure, right? Digital public rails upon open source upon which to innovate. So it's a lot of similarities and some differences. And that's been a partnership between regulators and banks, very much in the same way that occurred in Brazil. And those really are the two standouts. Thailand has a very impressive infrastructure with prompt pay in terms of growth and penetration. We've got a couple of other examples here and there. But those two really stand out. I know, Sullivan, I see you kind of nodding if you have any comments there.
Yeah, no, I think it makes a lot of sense what you said about UPI, Lindsay. I think it is somehow different from what happened in Brazil, but even the president of the Central Bank of Brazil said that he really looked to India and UPI and how they build infrastructure to think about PIGS and developing the agenda. And regarding your question about how like this agenda will evolve and will be will have a continuously approach in the developments, in the different developments of the central bank regarding government and politics. I think that the central bank now they built an report about being like an innovative central bank and an innovative regulator. And now they have this brand of the central bank being so modern and so forward-looking. And I think that this will remain regardless of changes in politics. And yet last week we had the annual event of the central bank. It was specifically about the DREX, but the president of the central bank talked for almost 1 hour. And it was very impressive, like how much he knows, not only about the technical side, not only about the regulatory side, but also about the technical side. So hearing a president of a central bank talking about crypto assets, talking about infrastructure, talking about DLT, it is very impressive. It is very different from what I have seen in other countries.
Thank you, Sullivan. And I think that, there's something beyond just the industry. There's something about the role of, I think it speaks so importantly to the role of leadership in any organization, right? Just a visionary, committed, energized, inspired leader. Organizations live and die on leadership. And so beyond everything related to the industry, there's just a really great lesson there about leadership that deserves some attention as well. Let's go to you, Raymond.
Cool. Thank you, Lindsay. I wanted to make 2 quick comments to Ruben's earlier question about what are like other examples worth considering around the world, right? And I mean, it's hard to think of examples like Brazil, where the central bank has been so involved and so, frankly, successful. If we can extend it from not only central bank, but let's just call it like, government bodies, generally speaking. The 2 examples that come to mind for me, the first one is that I'm more familiar with. So the first one would be the European Payments Initiative, right? So not quite, I mean, the European Central Bank is involved, but it's probably much more of a European Union, European Commission backed thing with the technocrats and bureaucrats behind it. I think we have to see how successful, if it's going to be. And so the jury's still out on that one very much. And it's probably, it's been around for a bit, but they've only recently started getting going. So I think the one in Europe, that's one to consider for sure. There's a ton of government-related orchestration behind that, right? And tons of political forces as well. And then the other example, probably on the much more extreme anti-democratic side of things, but I mean, this is kind of old news in the industry now because it was almost 10 years ago. But when Russia was having trouble with the Ukraine the first time around throughout the 2010s, they were responding to sanctions from the US, right? And so, there was an incident where a lot of foreign players, namely Visa and MasterCard, they could no longer freely process in that market. And so the initiative from the Russian government's perspective, and I think it's quite rational, was we're not going to depend on a bunch of foreign companies to run our consumer digital economy. We need to do it ourselves. And so they built out a network that, for most intents and purposes, generally works when you're talking about domestic transactions within Russia. They've got a few cross-border transactions with some ex-Soviet countries, but that's really it. And I think that's very much the network that they depend on today when the country is fully sanctioned by most Western governments.
Fascinating. That's definitely a topic that we haven't really touched upon. So thank you for bringing that up. Really, really interesting. Well, let's move on to our next topic here, which is very related. So I just want to continue here on the deck here. But related to this point, central banks, right? We move on to the next slide here. It has been just simply proven around in Latin America and around the world that there is ferocious and underserved demand for, and the list of qualities are debatable, right? But fast or instant, mobile enabled, free, personal, and A to A payments, account to account payments. This is truly an innovation that's scaled in the past just couple of years. And we're starting to see proof that there is demand for this is the fact that, first of all, the services that do exist have scaled very rapidly and are being utilized at an enormous level. And then countries around the world are, just on this topic of where this is taking place around the world, we have UAE just this year launched their instant payment scheme. We have South Africa with PayShap launching their scheme. All around Asia, some of them have been around for a long time, others are newer. In Africa, almost every sub-region of Africa is trying to solve for this. In Latin America, we have almost every country working on this project. So this has been proven to be true. And my question is, some food for thought is, are all of these 5 qualities here, attributes here, required? Is this what the demand is for, or are some of these optional? When we talk about, right, Visa and MasterCard and card schemes, does it have to be an A-to-A payment, an account-to-account payment, or could such a service run upon card rails, right? Does it have to be drawing off of your bank account or your mobile wallet balance? Is that really the difference maker? Or could it be running over some other type of rails if the other elements were there? Many banks, banking systems around the world have instant payments, but they're not yet mobile enabled through an agile alias base I can send to my contact on my mobile phone. Is it the P2P aspect that's most important? Is it the free aspect that's most important? Cesar, what do you think? Are all 5 of these required, or are some of them negotiable and we could think about other models?
Yeah, I mean, I like to think, like, I really like the phrase that people need banking, they not necessarily need banks, right? Like, people need to move money, they need to move money. And I think not necessarily we need to talk about account-to-account payments. It can be anything. It can be, especially nowadays that we are talking about, like, a number of different types of assets, crypto, CBDC, multi-currency wallets, like all those things. So we could be talking about anything. But I think I agree on the piece that people need better ways to move money and cheaper ways to move money. And I think the first thing that comes to mind is that, moving money through cards, it is expensive and someone is paying the bill, even if it's not explicitly, either the merchant is carrying out the costs and the merchant is passing over those costs to the consumers. So someone is paying for that. Someone is paying for the reward. Someone is paying for the interchange. So I think the need is there. I think the 4 first point for me are very key. And I think account to account was a natural extension of that, because it was probably the first way that we found to reduce the overhead costs that we had with card processing. But there might be different types of payment methods in the future. I think that's my key takeaway.
My question is, a lot of countries are behind in enabling fast payments, and so given the fact that there's demand for it, it's pretty much up to the market still who will solve for that. And a question that I have is, if debit cards are fully like Chile, right? Chile has a perfect example. Chile has massive, deep penetration of debit cards. Now, the acceptance piece isn't there necessarily, right? The thing about Pix or any other type of fast payment system, acceptance is easier. It's much faster and easier and cheaper to scale. And I think in Chile, for example, you have the issuing side solved on debit cards, but not necessarily the acceptance side. And so a question might be, if acceptance were as pervasive of contactless enabled debit card acceptance, would that be potentially a solution or the supply to this demand that we know exists all around the world? And is that a lesson for banks and card networks in other markets? Or is it truly not tenable to take place over card infrastructure? And does it have to be some other type of lower cost system is a question that I think is really worth thinking about. Mexico is another example where the central bank is now moving with the launch of Demo But again, hugely speculative if that's going to scale and work, whereas cards are certainly not scaled across the whole population, but they are the prevailing electronic payment method today. So food for thought there.
I think you have a definite interest in convenience. I think that's the most important one. If it's easy for people to do,
right,
then they're going to go for that.
Yep.
Free is a real problem. Having free on there, the government can do stuff for free, but if it's free, then no one can compete with that. They have a monopoly and no one's even going to try. There's no innovation left anymore, no room for it. So having cheap
Correct.
is good. Free is a
Yeah.
problem. This is where it's like, oh yeah, you can use the card rails to make it convenient, but now there's a fee involved. Well, who's going to pay that? And one of the things that most of us on this call understand, but most other people don't, is there is a vast difference from sending money to someone as opposed to a purchase. A purchase is a complex transaction that you have payment fraud involved. It's that doesn't happen on central bank systems. That doesn't happen on cryptocurrencies or CBDCs. That happens on the card rails for credit card anyway, because they have the infrastructure and they have the agreement set up with all the banks. It's a very different game when you start talking about purchases. And this is where UPI got into trouble. This is where PIX has got limits, and they sort of knew that going in. They didn't try to do as much as UPI did, and that was a good move on their part. But that's where most people don't realize, oh no, it's just sending money. No, it's not. That's where you start having the fees come in. They're there for a reason. So, but the government can certainly be in the role of fast, easy transfers of funds, but then the added service is there has to be a cost to that, and people have to acknowledge that and be okay with it.
Right. Raymond, go ahead, jump in.
Yeah, no, I wanted to add a bit to what Nick was saying. So, I mean, this statement here, I mean, it's deliberately designed to be like a very clear, provocative kind of statement. I think what's helpful, especially when we're talking about the free part of it, rather than talking about A2A payments as a whole, it's probably helpful to split it up into P2P money transfer payments and P2M purchase payments, right? Because, you know, and we've seen this the world over with, you know, several different, you know, mobile wallets that have done this. But the classic playbook is you start with free person-to-person payments, and it should be free, right? You know, to gain traction. And, you know, of course, there's on the back end a fee that might be attached to it, but the provider often eats that fee. And then the way that they recoup their losses on the P2P side is by charging on the P2M side. And there are legitimate reasons why that should be a charged for service, right? You know, as much as merchants complain about, you know, interchange and cost of payments and this and that and whatever else, there isn't a merchant in the world that wants to deal with an uncontrollable fraud and risk problem, right? And so, you know, for the sake of all of those things too, I think it's helpful to distinguish this topic into, all right, free, fine, but there's that can happen more easily on the P2P side of the equation. And then when you're talking about P2M, it's a little bit different. That together often makes, you know, a virtuous cycle where things can work out, and a lot of mobile wallets have cracked the code on it. But I think talking about payments as a whole, probably more helpful to talk about distinguishing between P2P and P2M and how those things can get married up under a value proposition where some of it's free, but the other part isn't. And that's actually a good thing for the ecosystem.
100%. Love that. And that P2M aspect in most cases is going to be not free, but as Nick said, cheap, and cheaper than what's been available traditionally. Let's go ahead. On this note, all very related. This is more of a assertion that I have, which is completely arguable. But what I've observed, you know, in Latin America, the question is financial inclusion, right? Beyond Brazil, which has now pretty much solved for that, and Chile as well. But there's still huge gaps in digital payment adoption around even Argentina, which is a very fintech forward market. You've got the biggest and most, you know, famous fintech, Mercado Pago, Mercado Libre, still deals heavily in cash, right? So my hypothesis here is what we've seen with why Mexico has stalled, is that digital payments can't deeply penetrate, and I'm talking about going beyond the upper section of the pyramid, can't penetrate deeply or down into the bottom of the pyramid without without what we're talking about, without interoperable mobile enabled P2P. And this is me really kind of referring to Mexico, and that this is something that has really been a barrier to payment growth in Mexico. But I see this as well in Chile. Peru has, I'm sorry, in Colombia, Peru has done a fantastic job in scaling P2P with essentially one service. But that has, in order to go beyond the 50% mark, it has had to become interoperable with other services in the market, which gives it the potential to grow to 80, 90% penetration. So this is my hypothesis here. I'd love to hear, do people agree? Do people not agree? What do we think? We can start with you, Cesar, if you want to jump in.
Yeah, no, I agree. I think you either have either like a central bank or agents pushing the mandates, especially with the largest banks and the players who would have most of the market share, or you're gonna have like a private company that will eventually join forces with other large companies. So like Zelle, for example, you have like you started with the 5-6 largest banks in the US, and so having those 5, 6, 5, 10 largest players, I think will help to scale. Or you can be a very, very early adopter like PayPal, and you have a brand that has been built over the past 20 years, 30 years. So, but I think it makes things very differently, especially right now, to start off a brand new B2C brand and helps to scale from the ground. I think it's going to be really hard. So I would say yes, mostly with governments or private companies with those alliances trying to capture most of the market.
Can I go a little step further than this? Because you're right about this, but there's another one that follows this. How many times do you transfer money in a month? Maybe 4 or 5 times? How many times do you buy something? The next step for this is interoperability for P2M. That's the one where if you don't have that as easy and everywhere available, then you're still doing everything in cash. And you're still doing cash in, cash out. You're still you go to the market with cash in your pocket. And yeah, you might be able to use your account, but you might not. So you're prepared for not being able to. When you can do P2M electronically, that's when you can, anywhere, that's when you can finally get rid of cash. And in the West, it's credit cards, and that works, but we have the infrastructure for that. If you build a system for P2P, you can't then adapt it to P2M. It just doesn't work. You have to start with the idea of P2M eventually. Then you can build
this playbook, right? That Raymond was speaking about, right? I think that's starting with P2P to scale, but having that P2M monetization plan in your mind
but you have to build the playbook. Yeah, you have to build the P2P with the idea it'll become P2M. You can't come back afterwards and modify it. It's almost impossible to do that.
Right.
But
and
I'm sorry, Lindsay, but
no, go
Mercado
ahead.
Libre, and those kind of platforms, I think they are like a P2M. In fact, all of these very well with a QR code in certain way are a P2M from scratch. It's not only allowing people to transfer money person to person, but also to the merchant. I think there are a couple of good samples that are going in that direction. No?
Well, the thing I'm specifically thinking of was when you deal with interoperability, the moment you have interoperability, the game changes. It's all about payment fraud at that point. Everything else is in the appendix. It is all about it. The official numbers, $25 billion a year globally on payment fraud. That's not the real number. It's not even close to it. But the problem with an interoperable system for payments is what happens when you don't get what you ordered. You've got dispute resolution. You've got purchase guarantees. If you're just building a system to send money from A to B, that's easy in comparison. You got to start building all of that capability of how does someone raise a dispute? Who do they call? How do they deal with that? That's the problem with credit cards. The only reason that works in the West is that transaction amounts are high enough that they can cover the cost of it. There's a reason why you don't have credit cards, why everyone in the world doesn't have a credit card. It's too expensive to deal with the fraud on a 10-cent purchase, on a 50-cent purchase. You just can't do it. So that's where the real problem comes in. And that's the difference between, it's not a matter of getting money to an account where you don't know who you're dealing with. It's a matter of dealing with it when there's a problem. That's where all the problems are. And then you have fake accounts, you have fake merchants, you have all kinds of other problems, fake transactions. You got to protect against all of that.
We're starting to see the fallout. There hasn't been enough research done about fraud and scamming over PICs, but we've seen some things published, and the fallout, we're starting to see the fallout. So the fraud over credit cards is very mature. Fraud over these interoperable ATA systems is immature, but will swiftly become more of a pain in the side that everyone has to deal with.
Well, and that's the world I come from, on the good side, the prevention side. I must want to make that clear. And that's what I'm trying to do with what I'm doing now, is building that infrastructure with the idea of minimizing payment fraud with tiny transactions. That's everything that I've been focused on. When I go around and I'm invited to speak to people, it's all about the realities of payment fraud. I built half the infrastructure we've used in the West. And so I come from that deep technical background. And there's it's like, this is knowledge that's of value for countries that are walking into this and they don't know what they're walking into. And they're going to learn. And don't make the same mistakes we made in the West. We had to learn it the hard way.
I don't know if any of you caught, we did a webinar last week on several countries in Southern Africa, and analysis of building local payment infrastructure. And a huge issue is that many countries who are starting this journey don't know what they're getting into, don't fully understand the risks, don't fully understand the technical investments required, are trying to build things from scratch. And in countries where you have a population that is beginning to make digital payments, very vulnerable to kind of fraud and not really knowing how to navigate the system. So what you're saying, Nick, I think is correct. Learn from these lessons and amplify the message.
Yeah, and the reality is that it's amazing what they're doing in Africa. They're trying anything, because most of what we've done in the West doesn't work there. Great, try things, try fintechs, try all these other things. No problem with that. But when you start connecting them together, that's where, if you mess that up, it takes everyone down with it. Learn from us. That's the part that you need to be learning from us, is the interoperability part.
Lindsay, was that episode recorded, and is it available? I'd be very interested.
Yes, it was recorded. And I don't know if it's uploaded to YouTube yet. It was just last Thursday, but we'll definitely share that with you. Yeah.
Love to. Thank you. I just, before we leave this one, I wanted to make one quick comment, and more as just like food for thought for everyone, because I think it's a very good provocative statement here. So there is one major counterexample where mobile-enabled P2P and digital payments P2M sit completely differently, right? So, take the US market as an example. So Apple Pay, fairly successful, right? It sort of has a P2P angle to it, but it hasn't really gained traction. Obviously, plastic cards are ubiquitous throughout the US. But on the P2P side, people use P2P solutions that they actually can't or currently don't for scale adoption reasons for P2M. So in the US market, it'd be Venmo, it's Zelle, Square Cash is, Block Cash, sorry, is quite popular as well. And so, it's maybe it's like a bit of an outlier, because I do think there naturally are synergies between P2P and P2M and the interoperability, and you sort of need one to, scale the other in digital payments. And there are plenty of reaffirming examples of that, right? China, Sub-Saharan Africa, Pix is going in that direction. I think in the US, Venmo, Zelle, and Cash App are trying to do that, but not successfully. So you have a major payments market in the world where you've got digital payments and mobile-enabled P2P sitting in completely different domains, right? So that does happen as well, and it's interesting to think about that.
Yeah. Well, let's go to the next one here because it's very related, Raymond, to what you're speaking about. And this is, again, an opinion, but I think it's well founded. We work with a lot of clients and not even clients, just have a lot of conversations about how do we get these informal merchants to accept digital payments. This is, half the economy in Latin America, especially after COVID. Small businesses and micro merchants and street vendors. And, when we're thinking about Latin America, while P2P and P2M is very differentiated in the US and even in, major cities, potentially in Latin America, P2P and P2M are really, we're talking about the same thing for a certain slice of the population, right? Street vendors or sole proprietors, individuals who have a business activity to support them and their family. And this is me as an individual. I'm selling something. I'm not a business. I'm not an enterprise. And there's a lot of meshing of business and personal expenses because their business is so informal and so precarious. But there's a lot of fintechs, a lot of attention from the card networks and banks on this segment trying to get them into digital payments. But this is not going to be possible without a major pricing overhaul. Talking about Central America, the Caribbean, where we still don't have kind of free or big wallets that are offering low-cost systems. You have cards, you have bank transfers, but very miles away from where it needs to be for true financial inclusion. In a lot of Central American countries, we don't even have differentiated interchange between credit and debit cards, just to start. Debit card purchases are paying the same MDR as credit card is. And so there's still, in some of more second wave digitization countries, even Ecuador, Paraguay, Bolivia, Central American, Caribbean, I'm thinking about primarily, we need either both, right? Still massive fintech revolution combined with a huge pricing overhaul to move the needle. And a question that I ask myself all the time is, once you offer something low cost or for free, the goal of the whole industry is to eventually graduate those users into a paid model. And my question is that really feasible? Once you receive something for free, are you going to be willing to move into something different? And so that's my hypothesis for really moving the informal economy. Of course, there's many other barriers, but moving the informal merchants into more of a formalized and digital environment.
Lindsay,
comments here, but
yeah, I have some comments. I think you have a lot of different angles to see that, right? The first one, when you talk about especially emerging markets, you have like a legal aspect of the person like not wanting to have any transaction tracking, right? Like if they don't want to pay taxes, if they don't want to receive that, so they would rather have that in cash than having a card. In some markets, you cannot even have a card POS if you don't have established business, right? So I think you have a legal aspect of these people, like helping these people first to become formal, and that might be also a government push, helping them to have a light business structure where they can open a business more easily and they can formalize the business more easily. But then as far as payment methods go, in my mind, you have like cash, which is good for the merchant, but also it can be it can be a cost for the merchant, right? To receive cash, to carry cash, and it might be dangerous in some countries. So cash might not be the best alternative. Then you have cards, which they are electronically, they are safe. You have all the protection as a merchant as well, but they are way more expensive. And then that's where you have the opportunity for something like RTP that sits in the middle, right? That it can be cheaper than cards, it can be safer than cash. And I think that's the real opportunity for acceptance, especially within the informal economy.
Yeah, and I agree with everything you said. You mentioned Cesar, but most importantly for me, what I've learned is there's just a lack of truly understanding that there's real poverty and low income environments. And I think, Nick, you've talked about this endlessly, right? Through micropayments, really creating products and services that are adequate for the segment that we're talking about, which today in many cases still doesn't exist in a lot of these markets. And it's a combination of regulators, of fintechs, of technology players to enable that. But in most countries, we still don't have something that's really adequate for a truly low income segment. So we're only at number 4 out of 8, and we're almost out of time. So I love the engagement and the conversation and the smiles. It's fantastic. So let's just go through the rest of these kind of quickly. So this is similar to the point that we've just been speaking about. There are still, even though we spoke just so wonderfully this year about Brazil and all the progress there, there's still major infrastructure challenges to solve across Latin America. And mostly in acceptance, right? The issuing in terms of access to digital payments has mostly, I say mostly with a huge grain of salt, mostly been solved, but the acceptance side is still really lacking in terms of contactless infrastructure, in terms of interoperability, in terms of cost-effective card processing and acceptance, or payment acceptance beyond cards. There's just major infrastructure challenges still to solve. Enablement of fintechs. So this is, depending on the market you're in, there are still huge barriers that really require, these are big problems to solve that require the active engagement of regulators and banks, which we know are difficult to move. But again, for me, going back to this idea of leadership and inspiration and painting that opportunity is really key here. If we go ahead, fraud, right? We've talked a lot about fraud, and I don't have a lot of detail here. This is not my personal area of expertise, but the region still, this is not special to Latin America, although fraud rates are especially high in Brazil and Mexico. They have been for years, but a massive fraud problem, and is increasingly the number one thing holding the region back. When we talk about really solving problems of access to digital payments and usage of digital payments, outside of our main capital cities, and even inside main capital cities, fear of fraud is the number one concern for consumers and merchants in adopting. And I think one thing that's commonly misunderstood is that fraud or security can mean a lot of things to folks, right? What does a secure experience feel like? It may not be just, I'm afraid of a fraudulent transaction and losing money. It may be, I'm afraid the bank is going to charge me fees that I don't know about. I'm afraid that my personal information is going to be stolen. I'm afraid that I'm going to have a problem with my account and no one will answer the phone and fix it for me. So the question of security, I think, needs to be better understood and more deeply understood. Security is a bigger, I think, question than fraud, but fraud needs to be addressed in a more aggressive way. Going ahead, onto this topic of crypto. I think it's been proven that crypto definitively is not being used as a means of exchange at scale. This could change possibly, but today and in the midterm, I don't see this really being a viable solution for commerce. Of course, it has its own niche use cases. Cross-border payments is where blockchain in general, I think, has a very strong advantage. But CBDCs will be the next evolution for when we're really talking about scaled adoption. Now, this is still a long way out. We're talking midterm, but we're already seeing use cases in action around the world. Brazil has been a foremost leader in this, has branded it, and has an aggressive plan. So we'll be watching CBDCs very closely over the next year. And then finally, one thing that we didn't cover so much, but I've just seen increasingly relevant, is remittances are converging with payments, and a transformation of MTOs is coming. Traditionally remittances or money transfer operators have been kind of in their own little vertical to the side, enabling migrant workers to send money home, right? That's been the primary use case, and they've been a little bit off to the side. But I see these players really converging with payments, wanting to become super apps in their own right, wanting to become digital banks in their own right, wanting to enable B2B payments, wanting to enable digital payouts, right? They've developed these rails and these networks over decades and now see that they're well positioned to capitalize on many other payment opportunities while fees for personal remittances are coming down around the world. So this is another topic, very, very relevant, of course, to Latin America, especially Mexico, Central America, and the Caribbean. Okay, so sorry that I didn't get to have a discussion on all of these topics. I'm sure you guys have many brilliant thoughts to respond, but I just want to take the opportunity to share my top learnings, what I'm wrapping up the year with, and that's kind of positioning us to continue this conversation next year. So thank you guys so much for this very stimulating conversation. And just before we end, let's just go to the next slide here. Just want to take a moment and really recognize you guys and thank you for this year because, you know, we started, many of you have been with us from day one. April of 2020 was when we had our first coffee chat in a response to an unprecedented event in which none of us could go to work. None of us could meet in person, and our industry was already from the very outset being completely turned upside down. And so these coffee chat series was a response to the pandemic. We received a lot of support, great levels of interest and engagement, and we have just continued. We haven't stopped since April of 2020, fourth year running. And you can see the results we've had, you know, in 2020, we had 135 registrants. Now we're almost up to 2,000 registrants, max attendance, and has really stayed stable since last year. And I really want to thank and honor you guys who are here almost every week, contributing to the conversation. I learn so much from you all, and this session wouldn't be the same without your participation. So I just want to really thank you again for the support and believing in us and participating. And let's go to the next slide here. I always like to recognize our, folks who are with us on a very regular basis, these are our top 20 attendees for the year. And I just have to congratulate Nick out of anyone else who always gets the conversation started. I don't think everyone always likes his comments, but he gets the conversation started. And I value that so deeply because, I don't want to be up here talking at you guys constantly. So generating this back and forth is so wonderful. So thank you guys. I also really want to thank Sullivan Rocha and Andreas Farge on the PCMI team who are behind the scenes a little bit, but fully responsible for pulling these sessions together week after week, which is, it's not an easy task. So just thank you guys. Thank you for a wonderful year. And anyone want to chime in with any last thoughts before we sign off for 2023?
Thank you, Lindsay, for putting this all together. And I'm really surprised that we have been together for 4 years already.
4 years, can you believe it?
Slide, I can't believe it.
I know. I think it's terrific. I don't think there's any other community quite like this that I've come across. So I appreciate you guys inviting folks, and if you have suggestions, last year we did a survey, just didn't put that together this year, but if you have suggestions, topics, things you'd like us to do, speakers you'd like us to bring, if you want to be a speaker, we might even actually launch an application to speak because we just have a lot of interest. But if we just go to the next slide, anyway, please get in touch with us and let us know how we can do better. And we look forward to continuing this trajectory next year. We'll kick off in February. We don't have a set date yet, but you all will receive the invitation directly to your calendar. February, we'll be launching our coffee chat once again, as well as our 2024, that's a mistake, Megatrends presentation. This year, we're doing several regions. We'll deep dive into 3 global regions and then kind of have a global perspectives presentation. So keep your eyes out for those announcements. And I wish you guys all wonderful, happy holidays, very restful and peaceful end of the year, and a great start to 2024. So thank you again. We'll see you guys next year.